presentation, which says Uday Knowledge Sessions.
Yes, we can.
Okay. So I've tried to okay. So I've tried to keep the deck focused on some of the questions we've got. There's a lot of text on this, which I'll try and skip. Goal would be to give a brief overview of certain regulatory principles, what is RegTech in general, and also some overview of what is Signzy's role in this. A broader goal will be to actually able to answer your questions and kind of make it far more interactive. I will stop in the middle at few points because it makes sense sometimes to ask questions at the right time. But generally, whenever I stop, probably at that time would be a good time to ask questions. And anyways, of course, at the end, we will have time for questions. So yeah, let's start. So I think RegTech is a very fancy word, right? So reg means regulatory, tech means technology. But the reason why it has come into picture is primarily because, of course, there is fintech, right? So how can the guy who is actually doing all the paperwork in the bank stay out of it? He can't have the business guy suddenly claiming that he's doing fintech, right? So people within the organization who are doing paperwork also want something sexy, something nice to be called. So I think that is the main reason. There are so many fancy words going around. So why not a fancy word to describe what people do in regulatory terms? But apart from this light joke about it, I think the primary underlying change that is happening is that unlike previous world where most of your documents, your identity and information was in pieces of paper, a lot of this information now is in databases. These databases over the last decade actually in fact have become quite integrated, and you would have heard words like API, cloud computing, big data, and some ways what's happening is that the regulatory principles and the regulators themselves have had to have a rethink of how they would do audits, how they would make sure that compliance is happening. And so in some ways the what RegTech means is that it is a new paradigm, a new shift into the role of a regulator. Also, in some ways, the person who's doing all this stuff today in paper and checking documents would probably look very, very different. We'll talk about it at the end. And he would have to deal with a lot of technologies. He may have to get very good at data analytics and looking at big data. And I think this change is, I think, in some ways good as well because a lot of monotonous work was being done. And at the same time, you are not catching Vijay Mallya. I think with more data, more technology, what we'll be able to do is do value adding work in this space and actually use large data to really catch the wrong people rather than today where you give a lot of pain to good guys going up to a branch and doing this paperwork and the really bad fish are able to skim through the net. The of course obvious question is that are these principles strong enough and are these just pieces of paper, pieces of regulation, and they don't mean anything? So the answer to that is actually twofold. So one is that certain geographies are very, very strict about it. Example is Singapore, where a lot of fines are done. US regularly does $1 million, $1 billion of fines. A recent ruling on a very small bank whose net worth I think is roughly around $1 billion was $90 million. So almost 9% of the net worth they were fined for a money laundering case. So the answer to this is certain geographies are extremely serious about it. In India, I think the regulations are very, very serious. The regulator is very, very serious, but the fines have been weak. And I think while the norms are very, very strong, the deterrent, which means the fines, have not been as strong. We'll try and go through some of these principles. What are these principles all about? But you have to understand that it's not just about the rules that are being set, it's also about what bigger punishment can be given on those rules. Those both combined actually enable a far more efficient regulatory infra. Also, I think given there's COVID all around, it is of course an unprecedented time in most of the people's life. You guys are young, so for you it may not be as odd because you haven't seen anything which is as big. So maybe you would imagine that this is how life is and this will happen every 20 years. So let me tell you, like, it will not. My parents and so many other people who have lived for much longer also feel this is a huge unprecedented event. So I think just addressing that impact, I think from a regulatory standpoint, I think there is a clear impact. Especially what happens in financial downturns is that there is a lot of pressure to weaken the regulations, and there's a lot of need for cash flow, which is a great time for parallel cash activities to go on. And so, from a RegTech point of view, I think most regulators will relax things for the next 2 years, and post that, like what happened in 2009, that post the financial crisis, they had to really increase the regulation because they understood that the weakened regulations had led to the negative downturn. So I think you will see that here as well, that you will first see relaxing of regulations and then see far more stricter regulations. So now I think addressing the question straight head on, what are these regulations all about, right? And what does it really mean? So I think it is suffice to say that most of you will feel that there are so many regulations in banking, for every kind of product, like loan, account opening, small business account opening, insurance. All of you would have seen those bullet points. Some say PEP, some say FATCA, all those words that you do not understand. But I think one point I'll try and make is that you'll be surprised that all of those fields, all of those points that you're asked, all of those checks that the bank makes, all of them actually are about just one single problem, which is money laundering. And all global regulation is around this problem alone. And there's of course another part, CFT, which I'll talk about, but that is the minor part. The major part is the reason why all these regulations exist is because the banks are trying to prevent laundering of money. What is laundering of money? We'll again have a deeper slide into it. But just to give an overall picture, it is estimated that almost $2 trillion of money is laundered every year. One of the biggest beneficiaries of money laundering has been Bitcoin. A lot of you would wonder that, what is the real use of Bitcoin? So the truth is the real use of crypto is money laundering. The reason why the regulators hate crypto so much is because they are perfect conduits for money launderers and people who are laundering money. So what are the stages of money laundering, or what constitutes money laundering? So the first is the source of the money. In many geographies, certain activities are banned because of their immoral activities like prostitution, or their illegal activities, things like drugs or selling arms. Whatever may be the reason, or they can be activities like corruption, which is leading to this ill-gotten cash. Whatever is this ill-gotten cash, the first point is, did you get it from a source which was not allowed? So whenever a business would make money of drugs or prostitution, they can of course not use it and put it in the system, or they will be caught. Similarly, when you make money of corruption, you cannot directly put it in the system or you'll get caught. Or I think in a more humbling way, a lot of taxpayers actually do tax frauds in India, also US, but you cannot directly put it in the system or the tax guy will catch you. And this then you will convert this into what people call black money and then launder it. So the first is source, how that gets created, how the money gets converted from what you can call white to black. The second is that, of course, now you have black money, you have cash in your hands. But if you keep it in your hands, at least today, there isn't a strong enough parallel financial system where you can actually make money or use that money for any good. And it's very hard to, really actively use that money. So you try and layer it. You try and create a layer on top of the activity, so that it isn't known from where the money came. So as an example, I'll give a very simple example that a lot of households, save tax on selling real estate, and then they are able to use that money actually by paying off groceries or stuff that they can pay by petty cash. And the third is that uh, imagine, and one more example I'll take to illustrate this is that a lot of people would save tax money again by claiming that they are paying house rent to some relative, which will help them save tax. And this money that now has gone to this relative will go through an actual bank transaction. And so, in some ways, it is not as petty cash. Now, this is a white money inside the system to two legit parties. And in some ways, the source, which was illegal, that is, you were saving tax, has been converted into a white source. I know this was very complicated to understand at some level. Uh, I will briefly talk about AML regulator and CFT, and then I'll open it for question for I'll take a stop and open it for questions. So of course, because this laundering used to happen, the regulator had to do something. They created regulations around two primary things. One was that at every point of the financial system, to be clearly able to identify who this person is. And so the first principle in KYC measures, which are the largest part of any RegTech, is ID verification, that you want to ascertain who this person is uniquely. The second is, and of course, there are a lot of other stuff, but the second is that you should be able to figure out the source of wealth or the source of money that is coming into the system. These are the two major principles that the AML regulators applied. They led to a lot of subsequent measures. So, for example, in identifying people, there were measures like you have to give your proof of identity, proof of address, you have to in person verify that you were present, do what is called OSV, all these fancy terms. Then also, you have to make sure that the money is not coming from a country which has weak FATF, or it is not coming from an activity which is seen as high risk. If it is coming from, let's say, an activity like jewelry, which many times leads to a lot of black money coming into the system, people would tag it as a high risk client. And as a bank, as a financial institution, you will have to do far more reporting for that client to the regulator. So they set this system that one, uniquely identify the customer. Second, based on his activity, which can be he's a politician or it can be that he's dealing with jewelry. Based on his activity, determine his risk, and then report very high risk people to the regulator. Most of the times when banks are fined, they are fined for not reporting high risk customers to the regulator. And the reason banks don't do it is because the high risk customer actually tells them that, if you report me, then I'll not give money to you. I'll give to another bank. The other aspect is CFT, which is a recent addition to overall money laundering problem. This is basically money that is being used to finance terrorist activities. Best example is recently you guys would have heard that NIA had raided JNK Bank in Kashmir and had closed a lot of accounts that were belonging to Hurriyat. That law under which they did it was PMLA, which is Prevention of Money Laundering Act. And the specific clause which allows the NIA to do that is actually CFT clause, which is that you cannot use money to finance terrorist activity. So any money movement across accounts then can be considered as a risk, and then of course can be confiscated by the appropriate authority. And as I said, AML CFT compliance, there are a lot of things that you need to do, but primarily it is identity and knowing more about the person, called KYC. Identity, mostly proof of ID, proof of address. And identity remains a very, very core aspect of this, because um, even if, let's assume, you were to miss that he's a politician, but you figure out after 5 years, you still, if clearly no identity, you can reach that person. So one of the other big fraud that happens, and you guys would have heard, is called Benami. Benami basically means that the account belongs to me, a politician, but the person whose account it is given as is a driver of the politician. And that is one another big way to do a fraud. So even if somehow I cannot figure out source of fund, but I can use a very strong identity mechanism, I can still ensure that there is no fraud, because there will be a lot of post impact. That is why you see India being so bullish on Aadhaar. That is why you see the government pushing so much of Aadhaar adoption, not because they feel that there is a great user experience. I don't think government, knowing the government, they really care about your user experience. The real reason why they are pushing Aadhaar is because it helps them with tax compliance and tax coverage. So I'll stop here. The second part of the presentation is around privacy. The first part was about regulation around money laundering and CFT, which is the first principle of RegTech. The second is data privacy, which is an emerging principle of RegTech. So I'll stop here and I'll open to questions, and then I think we continue with the deck.
Perfect. Guys, anybody on the call, please use the Q&A function to send in your questions, and then we can pass around to Ankit. Do remember to address it to the attendees. While we're waiting, I think a couple of questions are coming in, but just one quick thing, Ankit, which I think was one of the questions that had been covered during the registration, which you were alluding to as well. Is so why are you mentioned for AML there are some clear regulations that the regulator has defined for banks to follow to track and catch AML cases, but there's still a number of different situations where very large, high profile cases have not been caught in time. So any reasons for that? Like what is it with the current status or the current situation or the current processes that financial services players follow that's leading to this problem?
Yeah, so I think let's take Nirav Modi, right? So Nirav Modi did a diamond fraud. And one thing that you need to understand, especially as what is emerging, is the reason Nirav Modi was able to do it is the following. That today what happens is that if he had to take a loan from a ICICI branch in, uh, let's say, Europe, he would post a document using Swift system, which will validate that he has enough money in ICICI Bank in India, and that there is a bank guarantee backing up his loan in India. And what happened is that and this was done manually using a paper, signed by the branch manager. So within the bank, there was you can think of it as a fraud, employee fraud, where an employee posted that he is good and there is no bank guarantee issue, as in he has no big liabilities, and he's good to get a loan. And then he got a loan. I think he got a bank guarantee from ICICI Bank in Europe, and using that bank guarantee, from Bank of Baroda in Europe, and using that bank guarantee, he then posted another loan. So the reason was because there is this manual paperwork trail, which kind of breaks down his actual data. He could have not got that loan in India, because in India anyone would have quickly checked his credit and realized that he actually is under a lot of debt. So as I think these data sources get more and more integrated and pervade globally, these kinds of frauds will become really less. In case of Vijay Mallya, for example, I don't think there was any fraud. Vijay Mallya is a case of course, there is a fraud, but at least what is publicly known, I don't think that's a fraud. You can always run a business and your business can go down and you can lose money, and hence you can lose lenders' money. But and you should not be personally liable for it. But of course, the fraud in Vijay Mallya's case is that he played a lot of bribes to Congress, and because now Congress is not in power and he's not, playing ball with the current regime, he has a hard time. But from pure fraud perspective, while Nirav Modi had done an actual fraud, Vijay Mallya, at least what's in the public, has not done a fraud. He's just a loan defaulter, which any businessman can be. Businesses can go down.
Thanks, Ankit. Couple of questions have come in the meantime. One question is you had mentioned Bitcoin in terms of money laundering. Could you cover that a little more? The question is, how does Bitcoin come in play in money laundering? Like, what is it that uh, you know, gives money launderers an option through this?
Yeah, I think you have to understand that the two principles of AML laws is identity and source of money. Um, Today, when you open a Bitcoin wallet, there are a lot of providers who are taking identity. But few years back, you didn't need to. You could have had a laptop, and even today, actually, you can have a laptop and actually spin a server, and you can start creating a unique wallet ID, and you can actually start buying and selling Bitcoin. Because there is no identity layer and no layer for knowing your source of funds, Bitcoin actually is a perfect way to move money from one place to the other. I'll take an example. So let's assume that you are a big hotel owner, and there is another guy who is, let's say, a drug dealer, okay? And the hotel owner makes a lot of uh, although drug purchases would be the wrong word, but let's assume he makes some purchases on drugs. Now, of course, he cannot pay this using his own money. So what he does is he actually buys it using Bitcoin. And the next time this drug guy wants to rent a hotel room, he also comes and buys a hotel room using Bitcoin. And so both of them actually can be part of a active financial system and don't have to pay cash without really having to store and deal with cash. Why this is very powerful is because, of course, in short term you'll think, why can't they just use cash? But imagine this happening over geographies, happening at a scale of millions and billions of dollars. You cannot carry that much cash. There is a term called hawala, right, in India. What was hawala? Hawala was nothing but you sending a request to someone in another country saying that this guy has given me money in cash. Can you give him money in cash? And these two parties trusted each other. In some ways, Bitcoin acts as that ledger that globally, as long as you are buying and selling Bitcoin, you can trust Bitcoin as a system. You don't have to have this Hawala network. Bitcoin is your perfect Hawala network. Uh, I can answer more on this if there are more questions, but I think the best analogy I think is Hawala, that Bitcoin can be thought of as a Hawala network across geographies.
Yeah, that makes sense. And then you can hide your identity, like you said. So on a related note, that means your KYC becomes a really important piece for banks, right? And there's a question here. So just switching a little bit. The question is from Raja saying, is the RBI sandbox available for testing KYC related technology? I know you will be, Ankit, talking about how Signzy can help with such technology as well from a KYC standpoint. I don't know if you want to just quickly give a brief here and then move to that at a later point.
Yeah, I think RBI has been very active, especially of late, allowing VSIP and giving sandbox. I think the sandbox part was not like, again, this is my opinion. A lot of this is my opinion, but I think RBI was pushed to create a sandbox by the government. RBI themselves actually could not understand what is the point of a sandbox. And to be honest, I am also not clear, and I am not clear what does the sandbox achieve, because as long as the regulatory principle is clearly established by a regulator, each financial institution, whether ICICI Bank, Axis, HDFC, can choose a technology to achieve that principle. Uh, I was not very clear what does a sandbox achieve, or is it just a way to say that, okay, if this technology works in a sandbox, we'll take it live. But that is a call of the bank. It's not a call of the regulator. Regulator has to create theoretical principles based on their theoretical understanding. So while I think sandbox work great for things like UPI, that okay, you can do it in a small, pilot, or lending, you can do it in a small pilot. I think for something as KYC principle, at least it was not clear to me what will Sandbox achieve, and I think now RBI anyways has skipped that, and they've directly come up with a KYC norm which is very progressive, and I think in some ways this has completely become redundant from a point of view of KYC. But I think government was pushing unnecessarily. I don't think government really understood how these laws worked, and they were just trying to get a quick PR.
I'm guessing you'll be covering KYC and also the new norms that have been highlighted. You'll be covering that in later on in the session, right?
Yeah.
Okay, perfect. One last question, then maybe we can move on to the next section. So question I think quite a few folks have put in. Trying to distinguish between.
Only just want to add one thing over here. The RBI
I love it.
sandbox is not more of a technology solution actually. So it's a less of tech, but it's more of the rules out there, rules and regulations part of it. So in general view, actually, I'll suggest basically not to see it at that as a more of a typical technology sandbox that we see out there, or banks or anything. But it's more of a basically a playground that has been given there. With a very huge number of users to try and see what kind of innovations can be brought in that. So I think that's more of the what RBI sandbox is. I just wanted to
Thanks,
add that.
Rahul. Yeah, no, thanks, Rahul. Thank you for that. And for everybody on the call, Rahul is from the Mumbai FinTech Hub. He's the FinTech lead there. Thank you, Rahul, for that, and welcome to the call. Just covering one last point, Ankit, before you want to move forward. There's a question. You talked about RegTech right in the beginning, what RegTech means. And some folks have said there's no RegTech and there's another term now that's been coined called SupTech, SUPTECH. Any ideas on what the differences, or do you want to just quickly talk through what the differences are between RegTech and SupTech?
That is in my deck, so we'll go through that during the deck.
Perfect. Cool. And then I think we can move forward to the next section.
Okay, so I'll reshare my screen. So I think we have talked about the first principle, and which is actually the longest principle in regulatory circles. The second emerging principle, which actually has started emerging with the emergence of digital world, is data protection. This principle in some ways was always there. As a bank, you could not share my data that I've shared with you with any other party. But because the way digital world has evolved, it has become so easy to share your data that now these principles are becoming even stronger and stronger. And the two main focuses of privacy or personal data is that one, the definition of what is classified as sensitive personal data. So, as an example, are your marks sensitive personal data or your employer sensitive personal data? So, I think every geography has come up with certain laws to define that. So, in India, of course, there is a law, we'll talk about that. And of course, the world famous GDPR law is also there. So, every geography will define first what is sensitive personal data. And then there are things which are also critical personal data. So, for example, your biometrics, that is not just sensitive, it is critical. So, it is your caste being known may be a sensitive issue, but certain data may be actually even more sacrosanct, and those kind of data maybe a bank should not even collect, let alone collect and secure. So I think to talk a little bit, so Indian law is PDP. It's not yet passed, but to talk a little bit about it, in fact, we also wrote a really detailed blog on the Supreme Court judgment in 2017. So I think those of you who remember 2017, it was a huge fight between government claiming in the Supreme Court that privacy is not a fundamental right, and it was one of the most landmark judgments by the Supreme Court of India. It was also a judgment by 9 judge bench, which makes it one of the most one judgment which will be very hard to overturn as well. And I think the reason why Supreme Court really gave such a detailed judgment is because I think they were able to have the foresight to understand that privacy may be seen as a small issue today, but as digital world emerges, privacy will become very very core to how we think about digital world. So, as an example, your password today controls all information and all your personas on your digital profile. Somebody who takes your password actually can completely change who you are in the digital world. And hence, in some ways, I think Supreme Court took this as a very important point. They kind of went against the government's will and gave a judgment to put it as a strong right to like a right in its own way. Of course, they put it in the right to life that you cannot separate privacy from who you are. And if the state says that there is no right to privacy, the state is effectively saying there is no right to life. And this was a landmark judgment. Of course, the second step was that the government had to create a personal data protection bill, which they have done. Uh, Personally, I have some reservations on it, but anyways, that we can answer during questions. But basically, what it means is that you need to, whenever you're taking some sort of personal data, you need to take informed consent. What is the difference between informed consent and consent is you would have seen a lot of organizations take a TNC, and a lot of these terms are inside the TNC, and you just do a click on the I agree and you're done. What does informed consent means is that you have to explicitly tell the person that this is what you're consenting to. You cannot take a click wrap around 10, 15 terms. That is what is mean by informed consent. Specific purpose. What does that mean is that, for example, if you are just opening an account, I cannot use your data to see if you are actually looking for a loan, which a lot of banks, financial institutions, even non-financial institutions do today. Third is data erasure. If I, as an individual, say that I don't want my data to be stored any longer, the organization needs to delete all your data from the systems. And the fourth is data portability. The data has to be maintained in a way that it can be moved from one system to the other. This regulation has come so that someone who's having your data, as an example, Facebook, cannot make a data mine out of you. They will have to be forced to not only share your data, but share your data in a way that it is portable. Uh, I think GDPR was the first law that was there. The difference, so our opinion of what is the difference between GDPR and PDP, and what are the small nuances. So I think both laws at least are landmarks, right? They at least give the right to privacy and allow the right to privacy. I think one large difference between PDP and GDPR is I think they're quite consistent on how private institutions deal with data, and I think both of them have very strong laws around private institutions dealing with the person's data. But I think the one big difference in PDP is that the government, in some ways, has been given a loose string to get access to the data of Indian people and Indian users. I think that is one big difference. And I think as this law comes into force, I think the one big test in Supreme Court for this law will be that the government's access to private data of user, how much does that stand the test of time and test of law? So that was about the two principles. Now from there, coming to technologies that are today, solutions that are today. We are also a company which is in our area of digital onboarding. There are two principles that I said before. One is making sure that you are the person who you claim to be. Um, of course, I'm not going too deep into what we do, but what today banks do is they collect a bunch of documents, they do video verifications that they've started doing. What Signzy is able to do is actually not only collect these documents and verify from data sources, but also do forgery checks, Photoshop checks on the document, do face matches on video to images, make sure that there is no video fraud, spoofing, videos are not being tampered digitally using deep learning. So we are not only able to actually do the basics of OCR and face match, we are able to do far more end-to-end security and higher levels of checks, which makes Signzy a perfect partner if you are a bank or a financial services where security is the key. Um, and from there, I think coming to also, what is soup tech. So I think so first the future of RegTech, right? So I think what is happening and increasingly will happen is that regulation used to be pieces of paper, and these pieces of paper then used to be sent out to a team, a risk team within the bank. That risk and compliance team used to interpret it, then send out circulars to inside the bank to different teams, and those teams used to implement. I think what is the future of RegTech is that the regulator will be able to almost code and create smart regulations, and these smart regulations then will be executed as contracts, as smart contracts over current systems. As an example, let's assume the regulator says that you can no longer open an account for somebody who's from Iran. And as soon as they say it, there is a contract which goes and enforces in all these systems. And those systems start rejecting whenever people choose country of origin as Iran. without actually somebody having to go and change the laws, or sorry, go and change the system. So I think that is the future that we see in RegTech. What is SoupTech? So SoupTech is maybe if you take this a step further, so one was that we were talking about how within the banks you can automate a lot of stuff, and instead of people looking at documents, you can do a lot of things using technology. SoupTech is that supervisory agencies actually are able to use technology to enforce these regulations, and then hence able to monitor risk and compliance much better. So the way to think about it is that a RegTech is for the paperwork guys within the bank, and SoupTech is for the regulator or the people who are senior guys at the regulator side. I think also coming to one recent ruling, and also leading to one of our products. So I think one of the things we have been very strong on since 2016 when we started is that we always felt that today video can capture any and every information, and that bank officials don't need to go to your home, or you don't need to go to a branch. Recently, RBI actually came up with this regulation, and SEBI came up with this regulation. Of course, our video KYC product is today used in a lot of SEBI related organizations already. And I think we are one of the core Indian companies, and I think we are also now working with global companies in video KYC. I think this is one regulatory change which is very big. It seems a very simple change because we are so used to video calls everywhere. But in regulatory terms, IPV, in-person verification, has got replaced by a video-based IPV, and this single change will cascade into so many changes in how onboarding is done, how paperwork is done in banks, that we've just started seeing step one. And this regulatory change is not an incremental change of saying that you can now use Aadhaar versus 5 documents, or you can have OTP based Aadhaar. Actually, this is actually even more fundamental. And this is a change which is more like 20-25 years decade kind of changes, which is more like shares getting demat. Again, a lot of you may not know, but I think one of the monumentous changes in Indian financial services was when physical shares were dematerialized as demats. It completely changed our investment landscape. So this video KYC is that kind of monumental change, and that is why I'm putting it at even a higher pedestal than Aadhaar in India. And this is a change which is now resonating globally. And you will see globally, you will see very different onboarding KYC journeys across banks that will get created. Of course, the benefits are amazingly high. You don't need to have branches. You don't need to have ops guy going to your homes. The same way as you're talking to people today, your friends today, who maybe you meet once in a year, but you have really good relationship on phone, is what will happen. Of course, these technologies need to be secure in terms of end-to-end encryption. They need to have high data capture so that all of this data can be captured, used by a regulator to audit. All those things need to be there. And the third thing is that because these things now can be done through a video, you can do, for example, if you're a bank in Bombay like HDFC, you don't need to open a branch in Assam. You can actually onboard somebody, give him loans, give him accounts sitting from Bombay. So I think this will be far more monumental than what we have thought. In general, financial services scaling was all about opening new branches, and that will completely convert to a scaling which is very akin to, let's say, uh, WhatsApp or a TikTok, that people just get used to the flow and they can sit at home and do banking sitting from their home. In terms of career opportunities, actually, I will stop here and stop for questions, and then probably go to career opportunities as the last segment.
Yep, thanks. One question, Ankit, that's come in, so referring to the earlier part of this your section on data privacy, is from Ritika, where she's talking about the account aggregator framework that Samati is, for example, driving. Is that going to help with trying to help implement the data privacy norms that are coming in?
So one is that Supreme Court has clearly laid out a framework in terms of data privacy. Samati is a organization of account aggregators, but the regulation for account aggregators is again led by the RBI under a license called NBFC-AA. I think one thing we have to understand in India. So in India, there was a group called uh, I forget the name of the group. I'm so sorry. But UIDI was a regulator, and this group was very similar to Sehmati in the sense that they were the thought leaders on how UIDI should be accessed, how Aadhaar should be accessed, what should happen. But they were actually just a group with no real regulator backing as such. And I think Sehmati is an evolution of that. But I think what we have seen in India is very different from other countries, and groups like this work a lot in other countries. As an example, MasterCard and Visa are payment networks in the US, and there is nothing like UPI. But India, for some reason, has been a very government-led infra country, and the government has set down regulations. The other example of that is digital signatures, where in US you have a protocol like DocuSign, but in India, India laid out a norm of creating CAAs, and under IT Act, they created certain protocols for signatures, and there was very little room for innovation. So my bet is that Sanity and all are too small in the. I mean, they're great for adoption, right? They are like in some ways IMI or these industry bodies, but they are not the ones who drive regulations. Meeting and talking to regulators, one thing I've understood is that a lot of Indians want to be in the services, government services. A lot of smart people, my batchmates, used to study for government services or wanted to go in government services, and thankfully, India has some of the smartest regulators and many times they are smarter than most of the industry folks. And for that reason, I think India has been a very regulator-led economy, and I do not see that changing it often very soon. I don't think any of these bodies have enough leverage over the regulator.
Okay. Okay. Another question related to video KYC. Do you feel video KYC would be supplemented with call center verifications? And what do you feel would be the impact on jobs with these kind of technologies coming into the practice?
Yeah, I think jobs will change, right? I think what is happening slowly and slowly is that the old world of paper and physical is getting disrupted by the world of digital, right? Jobs have changed in e-commerce clearly, right? Jobs have changed. You no longer have drivers, and many people don't buy cars. So I think world will change, right? I think the way to think about jobs is never that will job go away. So the example I always take is when steam engine was invented, everyone would have felt that jobs will go away. We were manually pulling a cart, and suddenly there is something called a car. We will never have a job. That's not true, right? You are living today, and you have enough jobs because the economic understanding of job is broken. So what is a job? Job is basically you trading your time for an economic value, and that economic value for someone else can be very, very large. I'll take an example. iPhone worker in a factory in China may be spending hours and hours and hours of their labor creating one iPhone, and somebody is ready to pay thousands of dollars for that, and this laborer is getting paid only $8 an hour just because he needs more convenience. So in the end, jobs will always stay, but their nature will change, and it makes sense to plan your job in a way that you are future protected. Like when I was in school and we were taking jobs, we were told that do civil engineering and there's a lot of scope for civil. So I don't know who has started that, but clearly not, right? Like I mean, there was no way in the world civil was going to have any scope in the future. And I think even when I was there, it was very clear that software was the way to go. So I think keep an eye for that. I will make few predictions of what are those things in this call, but don't get into there's a lot of scope for civil or there's a lot of scope for manufacturing, that kind of stuff. The easy way to think about it is any industry which is seeing more than 30% increase in salaries every year, that is the industry which is in huge demand. Any industry where extremely high rapid innovation is happening is the industry to go for. So that is the way I'll think about it. Don't worry about jobs. There'll always be jobs. Job is just a trading of your time versus someone else's time.
There's another question, completely in a different direction. You covered two major themes in this section. One was looking at how KYC technologies are changing with eKYC, video KYC, making it much simpler and easier to perform such processes and some such operations. And then you also spoke about the whole data privacy side of things, where with the digitization of these processes comes the risk of data leakage, etc. So, any specific thoughts on what are the safeguards that need to be put in, be it in terms of encryptions or technologies to marry the two? So, on the one hand, ensure that you have the ability for eKYC and video KYC to help, but still balance that with protection and data security.
Yeah, I think in some ways there is a fear of digital, right? But the truth is that actually digital is more secure. I'll give an example again. So what happens today very, very often is that when you actually sign that piece of paper, attest that piece of paper, and you give it to this bank sales rep, what he does is he gets actually $100 to submit your account form to this branch. Okay. So what he does is actually he makes 3 photocopies and he forges your signature and actually goes and submits at 3 different places. And this is a very, very, very common fraud in India. And imagine that this can never happen in a digital world. That guy who's on the video KYC at other end doesn't even know you, cannot record you, and rest of the operations were fully digital. So while I think there is this feeling that digital is insecure somehow, the truth is that the current way of things in financial world, the example I took in Nirav Modi's case, is far more insecure. Among the frauds that are reported in RBI, 60% of frauds are due to employee connivance, that the employee was, working with the fraudster. So employee frauds totally go away. A new risk, of course, emerges is hacks. You would have read a lot of crypto hacks. So, of course, a new risk emerges in terms of data hacks and data theft. And I think there are very strong principles on which technology can be built. You can never prevent data thefts and data hacks because you cannot ensure that each and every developer while coding will do it. But I think hopefully we are going into a better world. I think coding principles have improved and things are improving a lot. The one reason why data theft can totally not be removed is because data, even if encrypted, is encrypted with some key, and if the hacker is able to get access to that key, um, however, it can be a social engineering, it can be an actual brute force attack, whatever. But basically, encryption is nothing but locking your data inside a lock and a key. So if the hacker finds a key, of course, your data is insecure. So I think the fight here is that how difficult do you make it for the hacker to find a key? And some people make it too easy and they lose their data. But hopefully, we are moving into a better future where it's very, very hard to find that key.
Thanks, Ankit. It's really helpful. There are a couple more questions, but they're related to jobs and career opportunities. So I'll leave that for the next section. I'll just put one last question, then we can move there. I know, guys, that we're just looking at time. I know we're coming close to 4. We might just spill over for another 5 to 7 minutes. I hope that's okay with folks.
Yeah, I'll
So there's a
just
question.
drop a message.
Yeah.
I'll just drop. I had another 4. I'll just drop a message saying I'll be 5 minutes late. But yeah, I think you can continue. I'll share my.
Sure. There's a question from Rajesh saying, does Signzy provide services to P2P lending portals? I thought also just expanding on this, I don't know if you want to talk through it. I think you briefly talked about the services that you provide, but who are your target customers really?
Yeah, so I'll also share my screen for. So, I think talking about Signzy, we target large financial institutions. We can, of course, provide services to P2P or fintechs or anyone. But the reason we target large financial institutions, so you can see a lot of fintech on this slide as well. But the main reason we target large financial institutions is because as a software company, it makes sense to work with companies who have lack of technology talent. A lot of these fintechs have good technology talent, so they don't value us as much. So, simply putting, that is why we work with the organizations, large financial organizations who don't have technology talent. And second is these large financial organizations tend to have a lot of cash, lot of money, and they already have budgets, IT budgets going into hundreds of crores. So we are a very small part of their outflow. So those are the reasons why we work with large financial services. But yes, the technology can be applied to pretty much most cases where there is some sort of onboarding happening. I think this slide is on career opportunities. This is, of course, all fintech career opportunities. One thing to realize is that knowledge of regulations in fintech is extremely valuable. Even in our sales, we find the knowledge of regulation as a key aspect of doing sales. So whether you're a product manager or you're a cybersecurity guy or a designer, knowing regulations actually will help you a lot. Even a coder, the knowing regulations will help you a lot. So irrespective of who you are, if you want to go into fintech, which is an emerging industry, banks are also now becoming fintechs in some ways. Knowing regulations will really, really help you. Apart from knowing your technology and your stack. And of course, I don't know, like people are from different backgrounds and you would have different aspirations. I think some of the roles that will continue to be here are product manager, compliance managers, cybersecurity analyst, a data specialist. Sales would always be there. Sales is about people to people, UI UX designers, cloud management professionals. Some of the jobs which will not remain here probably are your operations team who are manually looking at documents and manually looking at stuff. So I think when you're choosing jobs, be very careful. Don't choose jobs that are actually going away due to automation. Choose jobs that are value-adding jobs and will stay even when automation has gone away.
Ankit, what are the skills you think that students should be really like looking at? We've got a lot of folks who have no past experience, they're just passing out of college. What are the skills that really help? I think we've got a lot of engineering students as well on the call.
Yeah, I think as I said, right, it depends on the role that you want, right? I just put my slide. I'll not talk about it, so people can anyways note down and take a look. So I think people would want different things, right? So if you are looking for sales and marketing, of course, the skills are different. If you're a coder, skills are different. But I think the point I'm trying to make is the following: that you guys are smart and you're reading a lot. So don't try to think that just because there are 1,000 openings for, as an example, bank officer who's sitting in a branch and taking decisions on loans, that he will be there. So be very smart and say, no, I feel that, a product manager, banks are hiring more and more product managers, even though there are 10, but I think they'll hire more. Or there's a lot of focus on user experience and so many people are hiring user experience people. So if I have an option, I should choose that. Even within development, like choose modern technologies, choose a startup to begin with, or even if you go to a bank or a large organization, choose to stay in teams which are young teams rather than working with a team which is working on old technology. So those would be the kind of feedbacks I would have. Of course, your skill from each um, role will differ a lot. Um, when it comes to fintech, two things I think critical. One I've told is regulation. The second I find a lot of candidates lack is the understanding of the sector. This is not so actually important for e-commerce, by the way. E-commerce, you can understand very easily that as a user, I would get frustrated if the screen is, hanging for 10 seconds because you are an e-commerce user. In fintech, what people fail to understand is that it's not just the user. There is a front-end user, there's a back operations guy, and there's a risk guy, there's a compliance guy, and there's a regulator. So knowing more about the industry, knowing more about these people would help you a lot. Whatever you're doing, coding, designing, product support, knowing about industry, how the business works, will also help you a lot. This is very unique of finance, by the way. I think and also some other industries like legal, where I think knowing the industry is also as critical as knowing how to code or how to do sales.
Thanks a lot, Ankit. I know you've covered this pretty much, but there was one more question while you were speaking, saying, hey, are there any specific tools? So one you mentioned, of course, having knowledge of the sector. Some folks have asked, are there any tools that you would suggest for learning as a product manager for regulations? And any other sources for learning about regulations? Maybe we can end with these questions.
Yeah, the best way to learn about regulation is go to RBI notifications and SEBI notifications. There's no other better way. But I think now lot of good magazines are coming. So there's a magazine called FinShots, which is very good for industry knowledge. There is a unit called Ikigai Law, who are publishing a lot of stuff on regulations. Personally, I don't follow things a lot, but I think what I've realized is lawyers and law professionals are very good at understanding regulations. So I think it will be a good rule of thumb to follow legal blogs. They will give you a good insight into how to read regulations, how to understand them. As Signzy, we also actually publish a lot on regulations, so you can follow some of our stuff as well.
Perfect. Thank you, Ankit. Thank you so much. I think that covers a lot of the questions. I know we overshot, so thank you for sticking around and a really interesting session. It's clear from the questions also that we got that the folks who are on the call were definitely interested, and it's good to see students interested in this RegTech space. And we thank you for taking your time out today. I'd also like to thank the students today who attended. We hope you found this session useful. Pratik, you could just put up that slide. So like we said earlier as well, the way we frame this is we want this to be made for you, for your benefit. So we'd love to hear from you and from you in terms of any suggestions you may have, be it in terms of the format or in terms of the topics that we cover. So do write into the email that's been shown, and look out for the next edition of the Uday Knowledge sessions. That's about it for us today. Again, thank you so much, Ankit. Hope you stay well and look forward to the future sessions with the rest of you.
Yeah, thank you.
Hello.
Thank you, everybody.